All right. Welcome in, everyone. Thank you so much for joining us today. I hope you're enjoying the first week of Winter Career Quest. My name is Hong Win, and I'm a part of the Careers and Professional Development team here at WGU. Oh, let me, right. Sorry about that. I think there's an echo going on. Okay. All right. We have an exciting session for today on the topic of mastering mortgages, and we have our friends from the Commerce Bank team here to present. It's always such a joy to have you guys with us. So with that, I will go ahead and pass the mic over to you.
Thank you. My name is Cassandra Kropp. I'm from Commerce Bank in the workplace banking team in St. Louis. And we're here today to talk about buying a home and understanding mortgages. For most people, buying a home is one of the biggest financial decisions that they will ever make. So whether you are thinking of buying a home soon, refinancing your existing home, or if you aren't sure whether home ownership is in your future at all, you can benefit from understanding the process and financial commitment that it entails. Today, we're going to review some resources and my milestones for you to learn education on your own, as well as to hear from some subject matter experts from Commerce Bank. This is our agenda for today. We're first going to start talking about what is my milestones by Commerce, why financial wellness is important, and then we're going to take a quick snapshot look at the course Buying a Home and Understanding Mortgages. And then our Commerce Mortgage team will have a quick presentation, and then we have a call to action and some times for questions as well. So the reason we are here today is because WGU has partnered with Commerce Bank to bring you my milestones as a free benefit for all of you. If any of you have already accessed my milestones or used it regularly, go ahead and hit that react button and either give a thumbs up or a heart in the chat. And if you haven't used my milestones, it is a financial wellness platform that provides objective, interactive tools, education, and solutions to empower users to take control of their finances. All of us are in a different financial situation, and with my milestones, you can gain financial education on topics that are relevant to you. We are talking about home buying and mortgages today, but there is information beyond that as well. My Milestones offers a variety of interactive learning mediums such as courses, interactive tools, articles, start here guides, video graphics, infographics, really however you like to learn. And any personal information that you put into my milestones will not be shared with WGU. And if you have any family members, they can also take advantage of this free benefit as well. So, why financial wellness is important? I'm curious to know what grade you all would give yourselves when it comes to your own personal financial knowledge. Go ahead and type in the chat if you're A, B, C, D, F, or somewhere in between. See a B, B minus, lots of Bs, that's good. So we have learned that 41% of American adults say that they don't deserve anything better than a C when it comes to their own personal financial knowledge. And that's exactly why my milestones is so important. It can help you improve your grade. And then a lot of times when we think about our benefits, we think of health wellness, we think of mental wellness, but financial wellness has such a huge impact on us as well. So I'm going to show you how to access my milestones, which is where we'll get some mortgage information today, and you'll be able to complete your call to action. So if you have not logged in before, you can go to wgu.mymilestones.com, or on your phone, you can scan that QR code on the screen, and then you will just enter your first name, last name, email, and a password. And then if you're a returning user, I'm going to show you where to save our resource for today. So you'll access it that same way by scanning that QR code or going to wgu.mymilestones.com. Matt is also dropping those in the chat right now. And I'll give us all just a minute to either sign up or get signed in. And I'm going to also give us just a very quick overview of the platform because it looks like a lot of us are familiar to it. If you are logging into the first time, it won't look quite like this. You'll have a prompt to take your financial wellness checkup, which is a quick questionnaire. That way my milestones can recommend relevant content to you. But this is a demo profile I've created, and this is my dashboard. So you'll see your homepage here. Once you take your financial wellness checkup, you can also view recommendations based on how you answered. It will give you some top ones, and you can filter by type as well. You can also view sweepstakes, so you get points. They're called sprouts for at any time you interact with the platform. Just something as simple as reading an article can earn you 25 sprouts, and you can use those to enter from a $1,000 prize pool every single month. So you can get rewarded just by interacting with the platform. You can save any favorites here. I have some mortgage ones saved here that we'll go over in just a moment. And we have the Commerce Bank Solutions tab. You do not have to bank with Commerce to use my milestones, but if you would like to connect with a Commerce banker or have additional questions about mortgage or anything banking in general, you can view that here. One course I want to highlight today, we're going to go to topics and then courses. And then yours might be in a little bit of a different place, depending if you have interacted with the platform at all yet. But we are going to look for the course called Buying a Home and Understanding Mortgages. And then over that heart, we just want to click a favorite, and that way we can save that later. And then in that course, you're going to get a breakdown to your specific situation on buying a home and different types of mortgages that will apply directly to you. So definitely save that for later. And then there's also a tool. If we go to topics and then tools, there is home affordability. This also lives within the course, but if you want to just look at a glance, you can put in your information and see if you're ready to buy a home and how much you can afford. I know that was something I was definitely very confused about when I was in the home buying process. I know my budget, I know how much I can spend a month on a mortgage, but I don't know how much of a house I can have. So that's a great tool as well. So make sure we save those. And then I am going to pass it over to Jeff and John for our mortgage team to give you a more in-depth look on mortgages.
All right. Thank you, Cassandra. Good afternoon, everyone. My name is Jeff Lucas, and I am here with Commerce Bank in our mortgage division. I'll be talking with you a little bit this afternoon. Also, my colleague John Blair will be sharing some information, and we just wanted to kind of provide a little bit of kind of a high-level overview of some things to consider when you're looking at mortgages and just kind of getting acclimated to what mortgages is like now in 2025, and being able to go from there. So I am just going to share my screen here very quickly, and we'll get into this presentation. So hang on just a moment for me. All right, let's go ahead and get things going. All right. So, looking at, a lot of us have heard this particular expression, the American dream. And a lot of the American dream is associated with home ownership. And as of last year, roughly 66% of all Americans are homeowners. So you can see that this is an American dream that a lot of people strive for. Well over half of the Americans, this is kind of one of the culminating events for looking at being able to, you know, put their hard-earned money to use and buying a home. And it's one of those things that people are very in tune with. They want to do, and it's something that at first can seem a little bit daunting, but as you kind of get a little bit more educated in the process, we're going to be able to see that it's not entirely too complicated. And one of the things that we pride ourselves on here at Commerce is the ability to take a very consultative approach with you. When we're working with our mortgage bankers, if you are so inclined, That's one of the things they're going to want to do is we're going to want to make sure that you feel comfortable with the process, that you understand what's going on, and we're going to be able to lead you through. And depending on your level of education, if you're experienced with mortgage, we can kind of, take things that way. If you require a little bit more handholding, that is certainly something we want to do. But that is one of the things that is really makes Commerce unique is we do take a very client-centric approach, and we're not afraid to have a consultative approach to the mortgage process. We want to be able to educate you so that you feel comfortable. And that really helps separate us from a lot of the lenders that are in this space that are more interested in sort of the transactional operations when it comes to getting a mortgage, as opposed to building a relationship, building the trust, and being able to work with you through this very exciting process. Because as you can see there on the second bullet point, buying a home can be exciting, but it can also be stressful. Certainly be stressful if this is the first time that you're going through the process. And it can be stressful if this is maybe the second or third time going through the process, because as we'll talk about here in just a few minutes, there's been some changes that have taken place. And depending on, the last time that you received a mortgage, if it was, more prior, the mortgage that you're on right now is prior to 2008, 2009, there's been a lot of changes since then. And what we like to do is we like to help make sure that you understand what those changes are and what they mean, for you. Each and every transaction is going to be different. So there's really no, sort of rinse and repeat type of transaction when it comes to buying a home or conducting a refinance. Each transaction is unique to that individual, and Commerce is very much in tune with knowing that each one of those transactions is going to be unique. And we want to take our time to be able to work through the uniqueness of each transaction and work with it to get it done correctly the first time. A lot of times right now in our current particular market, there's going to be, not in addition to the financing, there's going to be sales contingencies, especially in competitive markets where it's really a seller's market, which we're in right now in terms of purchases. And the real estate market as a whole right now is pretty heavily focused on purchases. There are still some opportunities for refinance, but most people that are looking at mortgages right now, they're looking at buying, a new home or being able to get into that first home. So there are different things that you'd have to navigate from time to time. Sales contingencies with you as the buyer. There could be sales contingency with the seller. And just knowing that you have confidence in the team to be able to kind of go through those is one of the things that we at Commerce pride ourselves on, is taking our expertise and being able to help you with that. There's also what we call domino transactions. And those transactions there are certain milestones that have to be met within the transaction in order to complete the entire transaction. So maybe there's a fact that you're going through financing, and the sale is of you purchasing the new home is contingent on the sale of your existing home, and or there are transactional pieces on the seller's side that need to be made. And all of these lead to target dates that have to be met. And we pride ourselves on being able to meet those transaction dates, especially when it comes to purchases, because there are contracts involved. There are certain deliverables that have to be met with those contracts, not only just the closing date itself, but there are other deliverables such as being able to sort of verify the loan at different particular times. And we at Commerce have that expertise to be able to kind of take you through that process and work with you. As I mentioned before, yes.
Before you continue, and this is just a logistic thing, would we be able to have you stop sharing and then reshare? We're getting a next slide screen, and I think you might have an option to blow this up just a little bit bigger.
See if I can or not. That change anything? I'm sorry.
No, that's and actually I that changed it for the worse. It went back. It's now a black screen. So maybe a stop share and a reshare might be best.
Okay. All right. How does that look?
Now we're talking. Thanks so much. Appreciate it.
Yeah, no problem at all. Sorry about that. All right, as I alluded to previously, there are many changes that have happened. A lot of these changes uh, have come into play. Doing something. I apologize here. There. All right. A lot of these changes have come into play prior to 2008, or after 2008, I should say. Before then, we had guidelines that were a little bit looser, and some of the deregulation from over 30 years ago made buying a house a little bit of a simpler transaction. Interest rates certainly prior to 2008, a lot of times were a little bit elevated. For some of you who maybe have talked to your parents or your new parents growing up that were buying homes in the 80s, it was not uncommon to understand mortgages that had interest rates 10% or more, just depending on what you had. And looking at that, particular time frame, there were just a different environment. And through up into 2008, when we kind of had the real estate collapse, there were a lot of lending practices that were a little bit riskier. And some of those lending practices and how things were done led to situations where maybe there were loans that on the books that should not have been on the books. And it caused quite a bit of issues and caused a lot of trouble within the banking industry as the dominoes started to fall into place after a lot of these loans and things that were underwritten that probably shouldn't have. So that led to a lot of regulation that came into play, and the Dodd-Frank Act in 2010 paved the way for a lot of new guidelines that banks have to meet in order to issue mortgages and be able to approve those types of real estate transactions. So we're in an environment of much more regulation now that lends itself to some different elements and some different challenges that all lenders need to navigate. We at Commerce have dialed in a lot of those particular things, and are really able to work with individuals so that we know by going through a very, what I like to call, application light type of a process. When we do a pre-approval, we're actually going to sit down and we're going to take a pre-approval, not just necessarily be pre-qualified, which means that maybe you meet a few specific criteria of what an end loan would be, but actually take you through a pre-approval where we're going to start getting some of the specifics from you, so that when we look at that pre-approval, we know that the numbers based upon the pre-approval as we're being provided are going to put you in a much better position to understand the likelihood of approval on that end loan. And that's one of the things that we like to do here at Commerce, to be able to help you. So what I'm going to do now is kind of turn this over to my colleague, John Blair. He's going to take a little bit more of a process here. He's going to take you through some different things as we look at selecting a lender and just kind of understanding a little bit of the mortgage nuances and how we take things through. So, John, I will turn it over to you, sir.
Great. Thank you, Jeff. So good afternoon, everybody. A couple of things that comes out real important when you're buying a house, and as Jeff has alluded to, so many things have changed over the years. This doesn't need to be a scary process, right? And so a lot of times, if we can go through and we can plan the process and have the steps linked out in our minds, we know that we can get from point A to point B to point C and get there a lot easier. So selecting a lender really should be one of the key starting points. And I don't say that just because I'm a lender, but think about this. If you're out looking at houses and you don't know how much you can afford to pay, or you don't know what the payment's going to be, how much better would it be going in, talking to your realtor, saying, hey, I'm pre-approved for XYZ amount, and I know what that payment's going to be. I know what the interest rates are doing, and let's find the house now that we know where our budget is and where we're at. And going into selecting a lender, you want to make sure that, number one, these lenders listen to your needs and concerns and understand where you want to be. A couple of things you should be thinking about during this process are, is this my first house? How long do I plan to live in this house? How much can I afford each month based off what I'm paying for rent? And when you start thinking about those things, if you go from an apartment or renting a house into buying and owning a house, a couple of things that people seldom think about, but things that the lender should be talking to you about are, number one, your homeowner's insurance. Number two, do you have a lawnmower? Number three, do you have a trash can? Number four, do you have curtains? Do you have a trash can for the kitchen? Do you have these things that you don't think about you're going to need because you were renting a property that who knows if you had your utilities included in your rent? Some places have that. Are you used to having a utility bill? What are these costs going to be? So those are things that you and your lender should sit down and talk about and build that into your monthly mortgage or monthly budget prior to getting a mortgage. The next thing that I would say is most people, when you talk to them, assume that you need 20% down, and they assume that all loans are 30-year mortgages. So if you're assuming that you need 20% down and it's going to be a 30-year mortgage, I'm not going to say that you're just wrong, but I am going to say there are options out there where you can buy a home with zero money down. And you can also go as much as you want to put down. The reason I think 20% became the number is that eliminates what's called private mortgage insurance. And private mortgage insurance is something that doesn't particularly help you. It helps the lenders and the investors so that if something bad happens to the mortgagee, where that person no longer makes their payments and something has to happen to the house, the private mortgage insurance steps in and helps build that balance if we have to sell the house at a loss. And PMI or private mortgage insurance, as Matt pointed out in the chat, those are some of the terms that you want to become familiar with. And when you're talking to the lender, most lenders will have a sheet that they can give you of LTV, loan to value, PITI, principal, interest, and taxes. Especially if you're a first-time home buyer, those things are going to come at you in so many different angles where you may just feel confused. So selecting a lender is a critical part in this process because you want to have someone you can talk to and you can go over these items as they come through. Property types, single families, multifamilies, townhomes, condos, all the raw land. If you're at a stage where you've got a house and you're going to sell that house and you want to buy some land and build a home, there's loans out there for just buying raw land. There's loans out there for buying that raw land and the construction to build the new home. Those loans are out there, and we do those as well as many others in the community. But we'd love to sit down and talk to you about those types of situations. Occupancy. Occupancy comes in many shapes or forms. Investment properties or properties where you own the property, but you rent that property out to someone else, and that can help build wealth. Second homes, even primary residence. A primary residence is where you live. A unique fact for those of you that maybe had purchased a home several years back and now you're renting, if you haven't owned a home in 3 years, you are considered a first-time home buyer. So if you have 3 years of taxes that show no interest credit or no property owned for those 3 years, you can be considered a first-time home buyer as well. Yeah, I see the O coming out on the screen, so I like that. That's one of those neat little things that comes out. If I ask you in chat to type how many years you think a mortgage lasts, tell me what you think the life of the mortgage is in chat. Don't be bashful. There we go. Too long. I like it. 30 years. 5 to 7. Todd, that's not fair. You're in the mortgage business. Look at that. Yeah, you started following. You struck a trend, Todd. You let them all in on the secret. So the truth of the matter, or the fact of the matter is, the average mortgage, typically everyone wants to go with 30 years. In reality, no matter what the interest rates have done, whether they've gone up, gone down, stayed the same, the average life of a mortgage is 6.5 years. And what that means is people refinance, things change. People buy other houses, they move up, they move down, or even pull cash out if that's one of the things that they're looking at. So you want to talk to a lender that's going to talk to you about what your situation is and get an understanding for where you want to be to use this vehicle as a great vehicle to buy a house and go from there. Studies have shown that ownership in a house brings up all communities. It's like the rising tides rise all boats. If a community has a bunch of people that own their houses, all those houses are going to come up in value. People are going to have pride in the neighborhood and where they're at, as well as what a great way to start building wealth. And we know that home affordability is a big topic that's been coming out, and we've got tools that can help you get there. A couple of things that I would say to those that own houses so that we don't forget the ones that are looking at refinancing. One thing that you can look at, typically, my rule of thumb is if you see a 0.25% dip in the interest rate, it's time to start preparing yourself and talking to someone about refinancing to see how that's going to change or save you money. Quite honestly, I think 0.5% is where that number should be as a target. And for every 0.5%, it's going to really help you recoup some money and put it back into your normal budget. I still think, without anything else being said, I know that location has always been the theme to real estate. But I do think understanding what you're wanting to do is just as important as location. But I also think understanding how your budget works and budgeting for this can help make this a great process so that it's not stressful, number one. Number two, you understand what your payments are going to be as you're going in and as we go through how those things are affected. Now, when you see on the sheet, the last thing is credit score. Credit scores do drive a lot to do with what you do with a mortgage. Certain mortgages have a minimum threshold for a credit score level, while other things that credit score impact are rates. The higher the credit score and the lower the loan to value or LTV, then the better rates you're going to get. It's not just one option, it's and. So, those are key terms. It's not and or, it's and. And when you have a high credit score and a lower loan to value, you're going to have one of the best rates that's out there. And Jeff, you can turn the slide. When you think about products, the arm is not the arm and a leg, right? It's not going to cost you an arm and a leg to get into the home. An arm is an adjustable rate mortgage and a fixed rate mortgage. Those are basically the two vehicles that are out there. There are some interest only products out there, not very common anymore, just because of the nature of those products. Because when you're interest only, you are only paying the interest, not the principal. So based off the 2008 situation where there were a lot of unique loans and situations out there, those products were deemed not very good. There were also 1 year and 3 year arms, and because of the shortness of those arms, those were pretty much pulled off the table. FHA had a 3 year and a 5 year, and VA had a 3 year and a 5 year. Now, anyone that does arms, the lowest term on the arm is 5. When you see an arm, not to be scared of it, the 5 years, 5/1, 7/1, and 10/1, that first number is the number of years that the interest rate is fixed. It can be amortized over 30 years, meaning that you would know what your payment's going to be for the first 5 years in a 5/1 arm. And then every year after that, it can adjust and it recaches the payment so that payment goes with what the interest rate's going to happen. You get notification on it. So they're not as dangerous as many people think. And as I said earlier, the average life of a loan is 6.5 years. So the 7/1 arm might be a good product to sit down and talk to your lender about to see if that meets your needs and gets you where you want to be. There are also a unique loan that Commerce offers called Neighborhood Connections. That's a loan that deals with low to moderate income as well as low to moderate census tracts. And that loan actually can be as much as 0% down with no MI or no private mortgage insurance and a different set of interest rates because it's an in-house product that we push out and go from there. Portfolio loans such as jumbos. If you've ever heard of a jumbo, and with the new laws that came out, the conventional loan limit has gone up each year. 800,000 and some change are the conventional limits now. And when you look at that, anything over that's a jumbo. Pretty unique loan. Those aren't backed by the government. They're backed by private investors or portfolios of banks. Renovation construction, meaning if you have a property now and you want to get that property fixed up, there are loans out there that will take in consideration what the future value of that property will be after the construction or the remodeling, so that it gives you that added advantage of in the loan to value. Land only, as I mentioned earlier, when we were talking about construction and different products that were out there. And then home equity, which means you're able to pull the equity out of your existing home to then use it for other things. And then multi-collateral, and the I-10 is one that are unique products that probably would be a unique situation, but when you talk to your lender, they should have those in mind and know where those are at so that you can see what's going to happen. I think one of the biggest things too that you need to understand when you're in this situation is talk to some insurance companies, because insurance has become a huge factor in affordability. I know that right now we're experiencing huge fires on the West Coast, and we just had the hurricane on the East Coast. When you think about those two things and how insurance companies are affected, what that typically does for everyone, no matter whether you're on the East Coast, West Coast, or in the middle, it's going to raise our insurance cost. And that's something that we all need to be aware of when we go into these adventures of purchasing a home. Jeff, I think you take over next.
Yes. So, what we're going to be looking at here next is just kind of our conclusion. And I was going to have Cassandra bring up that conclusion portion. And we can, John, if you just kind of want to recap some of those things, I know she has a list of things there that if you want to run through, just to kind of overview some of the different things that you were mentioning there in terms of the products and things to consider as a final thought here as we wrap up the formal presentation portion.
Yeah, absolutely. So when you go in through most things, everybody understands what a call to action or things that you need to have on your checklist. So a couple of good things that you should know, identify your wants and needs to a new home. Um, Most lenders, we have it as a home buyer's checklist that it's as crazy as how many bathrooms, how many bedrooms, how's the kitchen, how much garage space, does it have a basement? And you can have all that on a checklist, and you can have multiple of those when you're going through the process. Determine how much house you can afford. You do that by getting pre-approved, and pre-approval is not a long drawn out process. Pretty much you're going through and putting a high level application in. We're asking you what your income is. We go through, run the numbers. It gives you an idea of what your payment would be. And it also lets you know where that would be so that you can feel more comfortable in your shopping experience. Review your credit report. So as you go through, the credit report will be pulled. Typically, there's 3 credit scores on there. If you do Credit Karma or you get the free credit report, that's not the same report that you get for buying a home. Quite honestly, those reports typically have a little higher credit score than what you get with a tri-merge, but it's always good to do that so that you can see if there are things on there that aren't yours or that could be dragging it down or boosting it up. But the tri-merge, and we take the middle score. So we throw the highest and the lowest out, and we take the mid score, and we go from there. If you have 2 of the same scores, then we take the one score that's different. Unless the one score that's different is the high score, and you have 2 scores, we take the lowest of those in that situation. Get pre-approved by a mortgage lender. Again, if you get pre-approved, the top 3 or 4 things are already taken care of. Review your savings to cover closing costs and inspections. I think that's a good point, that you need to have a budget, and you need to stick to your budget so that you can save that down payment. Again, the biggest falsity that's out there is 20% down to buy a home. You don't need 20%, but you do want to have a budget so that you understand how much you're going to pull out and where that's going to go. And then explore your options and organize your documents. And when we come to documents, the old rule of thumb is 3 years taxes with W-2s. I know that we only require 2 months bank statements, all pages, and that may sound funny, but all pages lets us know that we've got page 1 and 6. If it's 1 of 6, we want 1, 2, 3, 4, 5, 6. As crazy as that sounds, it's a little unique. Be prepared if you have a bank statement that has odd deposits that go on there to be able to explain what those deposits are. And what's an odd deposit? It used to be large deposits. I changed that term to odd deposits because now if it's not a payroll deposit or a direct deposit from a payroll, there's probably going to be a question that comes up along the process that says, hey, can you explain this to us so that we know where that money's coming to and from? And then we've got the W-2s, the taxes, the bank statements. If unfortunately there has been a divorce situation, a divorce decree is needed that's been signed off on. If unfortunately we've had a bankruptcy in the past, we need to have that executed bankruptcy papers so that we can have all pages of that. If you have a 401k and you disclose that, or you have other investments and you disclose those, we do need all the pages of those statements. And we do understand that 401k or investment statements only come quarterly in some cases. but we still need all pages and the most recent of those. And then just be prepared to answer some questions about those, because a lot of times during the process, this is where frustration builds up is, hey, I gave you my bank statements. Yeah, we get it, but there were 5 deposits on here that weren't payroll, and we need to have an explanation. And then sometimes that explanation then leads us to another question. So understand it's not us trying to be obtuse when we come to this. It's us trying to just make sure we understand the full picture, and we appreciate you understanding that. And then I think, Jeff, now we're going to go to questions and answers, or Q&A. If someone has questions and they want to type them into chat, and we'll try to answer them as we go through.
Yes, thanks, John. So yes, if anyone has some additional questions, feel free to be able to put those into the chat, and then Cassandra and Matt, they can kind of help us monitor those, and we can get those going. We can also look to have anyone raise hands and take themselves off mute. We can kind of go through that process as well, but I'll leave it to Matt and Cassandra to be our moderators, and we'll certainly get to as many of those questions answered as we can with a few minutes here before we turn it back over to Cassandra to wrap it up.
Thank you, Jeff. So yeah, feel free to type any questions in the chat. I see one. What are some other big misconceptions people have about mortgages?
Jeff, I'll take that one. So,
okay.
You know what? I think a lot of people have the misconception, especially since 2008, that it's a hard process, and it's drawn out. In reality, the typical mortgage transaction should take 30 days or less. But it takes a lot. It takes give and take from each side. That means having a good lender. It means having a person that's willing to give us the information when we request it, and then making sure you go through it. So I think that's one of the big misconceptions, that it's harder to get a mortgage today than it was in 2007. I think that there are just more questions and answers today than there were in 2007. And I think that's a big misconception.
Thanks. It looks like the next one is, can you explain what it takes for refinancing?
Sure. The easiest way to refinance is reach out to your lender, or you can send an email to allthingsmortgage@commercebank.com. That's allthingsmortgage@commercebank.com. And we can have someone reach out and talk to you. Typically, you'll still need to have your mortgage statement. We'd really like to know what your interest rate is, and typically that's on your mortgage statement, what your payoff amount is. We'd also like to know that you've made all of your payments. You haven't been late in a 12-month cycle. And then we would also want to know your insurance company. And then we'll have to do a new appraisal in some cases. Some cases now, with all the refinances that had taken place during COVID, there are the ability to not have an appraisal. Unique situation. But it's as easy as a phone call, doing an application, and that can be done in 30 minutes or less, and then locking in the interest rate and getting ready to close. That's pretty much the best way to say on a refinance.
It looks like the next one. Oh, sorry, Jeff, did you want to add on to that?
Oh, no, I was just going to address that next one there.
This Commerce Service mortgage loans for all states.
So right now, Commerce has the ability to lend in all 50 states. The one exception is the state of Maryland. The state of Maryland has kind of a setup where they are considered like a commonwealth, and they have a little bit of a different nuance when it comes to real estate and how they perform their real estate transactions. But for the most part, Commerce can handle the other 49 without any problems. There are certain limitations that we have sometimes as we get outside of our banking footprint, which Commerce has, which you can think of our banking footprint, primarily as the states that we have retail branches in. What that does is it just may limit some of the products that John was talking about, and some of the things there, but we can certainly work with those. As John mentioned, being able to do conventional. We also offer FHA, we offer VA loans, we also do USDA. So we run kind of the full gambit of what most lenders provide, as well as some of the unique products that we have for ourselves. But we can certainly help you in all those states with the exception of Maryland currently.
Thank you, Jeff. I did want to point out too, if you have a personal question that you don't want to ask on this call, you can either reach out to myself, my contact information is here, or if it's a mortgage specific, there is a phone number, email, or a link as well, and Matt has dropped that into the chat too. It looks like our next one is, could you speak on any instances that you've seen where investing in a home was not the best choice or investment for that individual?
Sure. Jeff, I'll take that one. So a couple of things. Number one, there's been people that think I think there's a couple of, this may offend some people, I don't mean to, but the Home Garden Network or Chip and Johanna Gaines with their program that makes it look so easy to go in and buy a house that needs some repairs, and they think it's going to be that easy. Remember, that's a TV show and that's a script. I think that's been some of the biggest hurdles that people have had to overcome. Is they thought it was going to be great to go in and buy a property, a fixer-upper, and they get into fixer-upper, and all of a sudden the fixer-upper becomes the nightmare. And I think there was a movie that was called The Money Pit, which that can happen. So you want to be careful with that. And that's why you do appraisals and inspections and that stuff. But I also think too that there's some cases where maybe it's just not the right time, and with the amount of inventory that's out there, a customer bites off a little more than they can chew. They stretch their budget, and again, this all goes back to making sure that you talk to a lender and you have that conversation so that your budget can be in place. Because what happens if income gets smaller in a couple of months, or maybe someone loses their job? It could put a lot of stress on an individual that they really need to be prepared for that. And that's why you want to make sure you've got several months built into your budget for those cases. And if you're a fan of Dave Ramsey and how he does money, having a 6-month emergency fund is a good way to look at it, because if you do hit that rough spot, those could be two of the downsides. Now, the upsides, remember the upside, I think there's more of those than there are downsides. And I think the upside, to kind of flip that question around, if you're paying rent, and what's the average rent? In the area I'm in, which you can see the arch behind me, it's around $1,900 a month. Believe it or not, you can get around a $250,000 house for that $1,900 a month. So the upside is I'm now taking that payment that I'm putting towards rent and I'm putting it towards my asset, which is now building me some wealth and moving things in my direction. So I would say there are good and there are bad, just like everything else. But I think the key to having that conversation with a qualified lender is the most important part of that. And that's what I would say to that. Hopefully that answered your question, Brian.
Looks like our next question is, on average, what is a more affordable practical option for a first-time home buyer? Would that be buying a land and building, purchasing a home for renovation, or purchasing a newly built home?
I'll take that one, John. So, in that particular case, as John alluded to, each and every transaction is unique and each and every individual is going to be unique. So I would say, from a general perspective, if you are a first-time home buyer, you want to try to keep things as simple as possible. And buying land and building a home is a little bit more of an involved process. It's certainly something that that we here at Commerce can help walk you through the process, but it's certainly a lot more involved, because you're going to have one transaction to purchase the land, and then you're going to have essentially another transaction, which is going to be the build of the home, which is going to involve blueprints and plans and picking out styles and everything there. And it's a lot of work. But if you feel comfortable with that, you certainly can kind of take it on. But just from a general practical purpose, that is going to be a little bit more complex, and something maybe you don't want to necessarily approach on that first time out. But if you feel comfortable with it, we can certainly give it a go. We will certainly be able to help you with it on that. And it goes along for renovations as well. Sometimes when you look at renovations, it will depend on the lender if they have specific products that will allow you to sort of purchase and do renovations and things of that nature. Sometimes you may not, you'll run into obstacles where you'll have issues with just purchasing the home depending on the level of renovations that they need. Because you have to think of it as the bank and you are in a partnership to purchase this house when you're utilizing financing in a mortgage. And the bank is just as involved in wanting to make sure that the house that you're purchasing is safe, it's sound, and it is a good piece of collateral for you to not only to be able to utilize and live in, but also for the bank to be able to have should anything go wrong with that loan. So depending on the level of renovation that's involved, if there's holes in the roofs and things like that, there may be things that have to be, done before you can even make the purchase, before you can decide to tear out a kitchen or a bathroom and start doing that. And again, depending on your level of expertise and your comfort level, it would be that. But I would say in general, probably the easiest thing for first-time home buyers is looking at kind of that turnkey solution with going out there, buying an existing property that is in good condition, that is something that has maybe been updated or updated to at least to a point where you can be happy with it and be able to go in and put your own finishing touches on. Sometimes it's with an existing home, sometimes it's with a newly built home that you have an opportunity to purchase from a builder and get to pick the finishes. So it just depends. But I would definitely think, make sure to work within your budget, as John has stressed. Work within, things that you're going to be able to afford, but keeping it simple is always going to be the easiest approach for a first-time home buyer.
Great. And then
I'm sorry, Cassandra. I was going to take the next one.
the
Are you
inspection.
correct? I'm sorry.
Oh, sorry. She had a little add-on. How involved in the bank is the bank with the home inspector process?
Typically, the home inspector process falls on the client, so the bank doesn't really have much of a role to play there. If it's an FHA loan, there's a rule out for FHA that says for your protection, get a home inspected. And if you show the lender the inspection, they'll want to know and make sure that everything is fixed. Reality is FHA is a great product for first-time home buyers because it ensures that for the first 3 to 5 years of that home, they go through and do the inspections and you do a home inspection, and it makes sure that your roof is going to last for at least 3 years. The windows and the heating and all of that are checked out so that it makes sure that you're protected from major outlays of cash for the first 3 years. That's more on the realtor side of the transaction than on the lender side of the transaction. But home inspections are good things to have.
And then I think you are going to answer the next one. Do you have to pay a closing cost when you refinance?
Yeah, and that's not as easy of an answer as one might think. But yes, there are going to be costs anytime that you do a refinance. There are different ways to handle that. You can have a little bit higher interest rate to where that covers some of the cost. But typically there are costs that go in because title has to be redone. And title is something that ensures that the property is yours, ensures that there are no hidden liens on the property and those things. So it is an important part of the transaction. Most of the time you can go back to the original title company that did your work and they may give you a discounted cost on that, but there are costs that are there. There's also a thing called a modification, and there is a fee on modifications, and many companies offer those that you can modify your rate based off of keeping the servicing and where that's at. And that becomes an easier process where you pay a flat fee. The paperwork is sent to you, you get it notarized, you turn the paperwork back in, and your payment then updates. So those things are out there as well. But yes, on refinances, there are costs that are involved because number one, unless there's been a lot of transactions in the community where we have a database that the underwriting system can deem it as appraisal waiver or not needed. There could be a new appraisal that goes along with it. There's also interest, just like when you bought the home or when you last refinanced the home, that you'll pay the interest. You could potentially have a month that you don't make a payment, that's lost in a lot of translations. Just because you don't make a payment doesn't mean you're not responsible for the interest. because interest is paid in the rears. And what that means is you are charged interest on the outstanding principal balance. And then once you make that payment, the principal balance goes down and we can only charge interest on the amount that you owe. So that's why interest is always pushed forward or paid in the rears, if that makes sense. But hopefully that answered your question.
Thank you. And I think we got all the questions in the chat. Thank you all for being so engaging and asking really good questions. Again, if you have a personal question, please reach out to me or our Commerce Bank mortgage team. One last thing is Matt is going to drop a quick 5-question survey in the chat that we would really appreciate if you could complete before you log off today so that we can review feedback from our sessions. And with that, I'll pass it over to Hung.
Thank you so much. Awesome here. We did have a last minute question come in from Stacy. I didn't know we had time to answer that one as well. On construction loans, are they set to pay interest only until the construction is complete? And is there a timeline in which the construction must be completed?
Yeah. So Stacy, yes, what interest only is what's paid on the amount that's dispersed, meaning as you go through the process, you're going to be so much of the money of your original construction loan is going to be given to the general contractor to pay the debts. As that money is dispersed, you're paying interest on the amount that is dispersed, not on the total amount of the construction project. And typically, our construction loan lasts for 12 months. We think most homes can be built in a 12-month window. Now, if the home is built in 4 months, then the construction loan is going to be a 4-month construction loan. But typically, we have it set up for 12 months. There are exceptions where it could go over depending on how big the house is. Certain things like shortages of lumber. We ran into that during the pandemic, and getting stuff delivered to make things happen. So 12 months is usually the window, but it's interest only on the amounts that are dispersed. And then once the entire loan or the home project's completed, then we do the final closing and start making the principal and interest payments as we go forward from there.
Awesome. Thank you so much for all of your thoughtful answers to our questions. And we'll go ahead and wrap up today's session. If you do have any questions later on, you have Cassandra's email there, or you can always email us at HireWGU and we'll field those questions through as well. So thank you all for joining us and for the great questions and engagement. We'll be sending out this recording along with that brief survey. If you could take a couple minutes to complete that would be great. We also like to extend a big thank you to our presenters today, Cassandra, Jeff, and John. You all shared fantastic insights into navigating the mortgage process. And thank you so much for your thorough and thoughtful answers to our questions. Your expertise added so much value in what we learned today. It's always such a joy to have the Commerce Bank team with us, and we greatly appreciate your time that you took out to provide us support to the WGU community. Thank you for the attendees. You were a great part of this session today as well. Great questions, great engagement. Don't forget to check out Handshake for upcoming sessions and visit our YouTube channel to watch past recordings. Commerce Bank team, I hope you guys stay safe in this winter weather that you're having. And with that, wishing everyone a fantastic rest of your day and stay warm and safe. Thank you, everyone.